Welcome to The Explainer. Today we're digging into a single, massive, and, incredibly sophisticated bet that was just placed on one of the world's most iconic industrial companies. It's a trade that tells this really fascinating story about tech, the economy, and where the smart money sees real value right now.
Okay, let's just get right to the heart of it. We're not talking about some small, speculative flutter in the market. We are talking about a single wager with a value that is, well, it's pretty staggering. And there it is, $67.5 million. That's the effective size of this one options trade on Caterpillar stock. I mean, a move this big, it just immediately makes you stop and ask, what in the world does this trader know? Or what do they believe so strongly that they're willing to put that much on the line?
But here's what's really fascinating. It's the type of bet this is. This isn't some gamble that the stock is going to rocket to the moon. No, it's a much more subtle, confident statement. It's a bet that the stock has a solid floor, a point below which it's just not going to fall. Essentially, this trader got paid today for promising to buy the stock, but only if it gets a whole lot cheaper down the road.
All right, so to really get what's happening here, we need to decode the trade itself. This isn't a lottery ticket, not at all. This is a calculated strategic move that big institutional players use to generate income and manage their risk. The strategy is called selling a cash-secured put. Now, don't worry, it sounds complicated, but think of it like this. You're getting paid an insurance premium to promise you'll buy a house for, say, $450,000, but only if its price drops to that level. You get cash in your pocket today for making a promise to buy an asset you already like, but at a huge discount in the future. Okay, so here are the nuts and bolts of this specific trade. The company is Caterpillar, ticker CAT. The trader sold 1,500 of these contracts, promising to buy the shares at a strike price of $450. And look at that expiration date. It's way out in July of 2026. For making that long-term promise, they immediately collected a cool $825,000 in cash. Now this is where it gets really good. That $450 strike price, that's not even their real break-even point. Because they collected that cash premium upfront, about $5.50 per share, their actual cost, if they ever have to buy the stock, is all the way down at $444.50. And to really wrap your head around that, think about this. At the time the trade was made, Caterpillar stock would have to fall more than 31%, a 31% crash, before this trader would even begin to lose a single penny. That is a massive cushion, a huge margin of safety. And that belief is the foundation for this whole thing. So, you've got to be asking, right? What gives someone the confidence to underwrite that kind of risk? Well, the first clue is a gigantic, technology-driven tailwind that is totally transforming Caterpillar's business as we know it. Here's the thing you have to understand. The Caterpillar of today is not the same company it was a decade ago. We all know the iconic yellow bulldozers, right? But a huge chunk of its growth story now has almost nothing to do with traditional construction. It's all about powering our digital world. And you don't have to take my word for it, just look at the numbers from the company itself. The energy and transportation segment, that's the part that provides these massive generators and backup power for AI data centers, is growing at a blistering 23% year over year. I mean, that is just blowing its more traditional businesses out of the water. So what this all means is that the crazy, insatiable demand for power from the whole AI revolution is giving Caterpillar this powerful, stable, new source of revenue. And the key word there is stable. This isn't tied to the ups and downs of the economy like construction is. It's a fundamental shift in the company's business model. All right, let's talk about the second piece of the puzzle, the second pillar supporting this whole bet. Because even if you just put the whole AI boom to one side, there's another powerful force at play here that basically creates a safety net for the company's traditional business. Yeah, everyone knows 2025 is probably going to be a bit slow for housing, mainly because of high mortgage rates. But look at 2026. That's when analysts widely expect the market to rebalance and really start to rebound. And hey, guess what? That's the exact time frame our trader is targeting with this bet. And the projections, they totally back this up. We're talking about double-digit growth in home sales as mortgage rates hopefully start to calm down. But the most important number to look at here is single-family starts. The forecast calls for over 1 million new homes to be built. That creates steady, predictable demand for Caterpillar's equipment. And you might be thinking, can we really count on that? Well, yeah, and here's why. The U.S. has a massive, multi-million unit housing shortage. We just haven't built enough homes for over a decade. This means the big home builders, your D.R. Hortons, your Lennars, they have to keep building, which means they have to keep buying or renting Caterpillar gear. It literally creates a solid floor for demand.
Okay, but let's be real for a second. Nobody drops $67 million on a bet without looking at the downsides, right? This trader isn't ignoring the potential problems. They're betting that Caterpillar is just strong enough to power right through them.
The biggest boogeyman on the horizon is a potential hit from tariffs to the tune of $2.6 billion. That is a huge number. But the bet here is on Caterpillar's defense. They have incredible pricing power as the market leader, and they're masters at finding efficiencies to protect their profits. The trader is betting that that defense is stronger than the attack.
So okay, let's put all the pieces together. We have the powerful AI engine, we have the solid housing floor, and we have the well-managed risks. What is the final message? What is this trade really telling us about this industrial giant?
It all really boils down to these three core beliefs. First, the AI boom has fundamentally changed Caterpillar's growth story for the better. Second, that persistent housing shortage provides a reliable safety net for its core business. And third, the trader is actually using the market's own fear and volatility to get paid a very handsome premium for their confidence.
And you know, this one sentence just says it all. This isn't about chasing a hot stock or trying to guess the absolute top. Instead, the smart money is making a sophisticated, value-driven move. They're drawing a line in the sand and telling the market, we're so confident in this company's future that you can pay us to be the buyers of last resort. So in the end, what we have here is this incredibly powerful statement of confidence, a belief that the company has this solid floor way down below the current price. It's a powerful statement about its fundamental value. And that just leaves us with one final fascinating question to chew on. If this is where the smart money is so sure the bottom is, what does that imply about how high the ceiling could be?